Whether you're pouring the perfect beer, striking a welding arc, or keeping food fresh, McDanta, delivering the best in mixed gas solutions for over 35 years.
Hello and welcome to the 1895 podcast with me, Tom.
And me, Rob.
Rob, how are you? It's been a few weeks since we've been here on the podcast. We've been amongst a bit of a heat wave here in the UK. We've been getting our heads around that previous event. So how have you been in that time?
Yeah, very good, thanks, Tom. I've been struggling to cope with that heat, to be honest. We moan all winter, don't we? And now we've got the heat, we're moaning about that as well.
I think we're allowed to as Brits, don't we? To moan a bit about the heat.
Yeah, exactly. But I think it's been fantastic, hasn't it? It's just a reminder, maybe these climates are shifting a bit because we are seeing this more here in the UK. And it's a reminder of what we're not equipped for, what we're not ready for, which is a great way of leading into this episode, actually.
That is a very nice segue, actually. We're going to cover a number of topics today, I think, because there's been a lot in the news recently, a lot of recent updates, and a lot of, I guess, lead-ins and things to expect in the next few weeks as well. So we've got a number of things on our menu for today.
We have indeed, and I think it's important to dive into some of those, a bit of a what do you need to know kind of episode, yeah.
And well, let's start this what do you need to know episode with a recent story. Listeners may have noticed this on the gasworld website, but this is the chart and Baker Hughes news that has come out, and Baker Hughes have closed on that $13.6 billion Chart Industries acquisition that happened just last week on July 16th.
It did, yeah. It's been a long time coming, I guess. I mean, we've been sort of thinking, talking, writing about this for 12 months plus. I think probably the last time we mentioned this on the pod, our expectation was around June. We thought this would be coming up again and would be the deal sealed, so to speak. So we're only sort of 1 month out from that.
Pretty close there. I guess slightly held up with an investigation that was being held from the European Commission that was due to different concerns around reducing competition in the global market for LNG equipment and technology. But that's all now passed, and this is now a done deal.
Yeah, and that's nothing out of the ordinary. For anyone that's listening that isn't aware, you will always have those competitive measures analysed, antitrust side of things sorted out in any transaction of this size. You've got to make sure there's no monopoly in the market, and we've seen it plenty of times before. The big example in this space, of course, the biggest example being when we saw Linde and Praxair come together around 2018, 2019 time, and we saw that whole tranche of divestments across different geographies, particularly Europe and the Americas. So nothing new in that. It's all just par for the course.
And thinking back on this story, I guess this is almost the deal that never happened, isn't it? Because around a year ago, initially there was a deal signed with Flowserve, and that was terminated before Chart came in with that new bid. So interesting how far we've come in the space of 12 months.
Yeah, I think the Flowserve bid was bigger, was it not?
Yes.
And then Baker Hughes has come in, and they've been able to to meet on all of their mutual expectations, and they've been able to convince all of the authorities and commissions in charge that this is a good fit and it won't be a problem in the market. So yeah, a $13.6 billion acquisition.
Yeah, a huge amount. So that's the story, I suppose, and we're still early days. We're still waiting for some of the details to come to light and everything that's going to happen. But I guess the initial question is, what does this mean?
Yeah, big question, Tom. That is the big question. We're all over that at gasworld at the moment. We've got that coming up in our upcoming print editions as well. We're trying to look at this from several different points of view. What does it mean for Chart? What does it mean for Baker Hughes? What does it mean for the market? We've had some analysis already from our insights editor around the $2 billion loans that have driven the deal, essentially. What does it mean for the synergies? Quite often when you've got these mergers or acquisitions, you'll hear a lot about synergies, and we think we can achieve X amount of gains through synergies. So we're trying to unpack that as well. Where can we expect to see those happen? And of course, yes, the divestments. What businesses are going to have to go, where, and by what timeline?
And as far as we know at the minute, Chart maintains its identity for now. We don't know what that's going to look like.
We don't have any inside track on that, but my expectation, my personal professional feel is I could see that changing after sort of 12 to 18 months. I could see it being, I don't know, Chart Hughes, a Baker Hughes, I can't see it being that. I could see it being Chart Industries, a Baker Hughes company, personally. But certainly in that initial period, you keep everything the same is the usual textbook thing.
And I guess the other question that's hanging over this deal is, what does it signify for the industry as a whole? We've seen consolidation across the whole industry. So does this trigger further consolidation among the other equipment providers? That's yet to be seen.
I think that's quite an interesting question. I'm not sure this is kind of the first domino that will fall, and then we'll see a slew of others. What I do think you could say, though, is it's quite clear the industry's in a moment. Is it an era? Probably more of a moment of productivity, of efficiency gains, of exploring all the different ways that otherwise depressed margins and headwinds can be overcome. So, yeah, often during those periods of relatively low organic growth, then you look for that inorganic growth. That's when you go for mergers and acquisitions and those synergies that we talked about. So it's feasible in this moment or this era, whatever you want to call it, that we could see more deals done. I struggle to see that they'd be on that kind of scale. But yeah, I mean, there's no doubt, certainly from my own viewpoint or analysis, I think the industry's been in this moment of productivity and efficiencies for 18 to 24 months and is still in the midst of that. And another topic we'll come on to later, we're likely to see more of that coming up in the upcoming quarterly financials when we hear more about the resilience and the headwinds and the moderated margins or revenues. So yeah, that's where we're at the moment. So we can't definitively say there'll be more deals like this, but we are in a climate of seeking inorganic growth.
Yes, and any further analysis will be on the gasworld website in the coming days and weeks as we delve further into this deal, won't it?
It will indeed.
Another story, which is one that we've been covering for a long time now, and that is the Iran, Qatar, Strait of Hormuz, the war that's going on in the Middle East. I've got my notes here in front of me. What's the latest? I guess that is the question that everyone's asking because there's so much going on. It's changing on an hourly basis.
Yeah, this could probably be quite a short segment of this episode, couldn't it? Because what is the latest? In many respects, who knows? I mean, what do we know? The ceasefire was signed on 12th of June.
Yeah.
I think it's safe to say it hasn't held. I mean, we were quite cynical in the office, I remember, in that first few weeks saying it's not really much of a ceasefire when you've got this renegade attack happening here and something going on there. It well and truly isn't a ceasefire now, is it?
Well, no, we've seen repeated strikes from both Iran and the US, and just earlier today, both sides threatening further strikes again. So I think it's definitely safe to say that ceasefire hasn't held, and where those negotiations are right now is anyone's guess.
Yeah, I'm not sure even the people doing the negotiations could give a best expectation on that. And yeah, the Strait of Hormuz is very visibly back into a sort of enforced state of closure one way or another, isn't it? Whether it's one side attacking the other or that. I was thinking about this during the ceasefire while it was holding. Even the sheer sense of uncertainty for anyone or anything that wishes to pass through that strait, it almost renders it closed in that respect, and now it really is.
Yeah, I haven't got the data in front of me, but I can't imagine many ships did pass through in that 2 or 3 weeks that the ceasefire was holding anyway.
Yeah, so I guess we'd say expect to see more stories coming up pretty soon. I mean, the last time we talked in the studio, Tom, we said the effects of the original closure of the strait would start to be felt around now. So expect to see more stories pretty soon if this carries on, where those effects are being felt and we're starting to really see the pinch points kind of vocalized. Yeah.
And I think this is maybe a good chance to return to some of the presentations we heard at our Specialty Gas Summit a few weeks ago. And this was a clip that we put on ice from our previous episode because the ceasefire had just been signed, things had calmed down. But this is on 3 possible scenarios on the outcome of the war or where it goes next. And I think it's more relevant than ever now.
Our speaker, Megan Sutcliffe from Sibylline, is absolutely incredibly on the money with this. Just for context, so I've been going back through the transcript from that talk and those scenarios that Megan presented as part of our recent print edition that I was stepping in on. And I thought to myself, this is pretty dated content, I'm going to have to take this out. It wasn't at all. The 3 scenarios, or the several scenarios that she presented, are all still valid now, and that was at the start of June. And it's weird how it's come full circle, but also just demonstrates how knowledgeable and sort of, how visionary, I guess, Megan was in terms of outlining those scenarios, that they are still relevant.
Absolutely, yeah. Let's have a listen to those 3 scenarios.
Well, I suppose there are many scenarios that we could be discussing, and of course many sort of sub-scenarios within those developments that we could be looking at, and I think that would possibly extend us beyond time for today's panel. But broadly speaking, in the realm of possibility and probability, there are 3 major headlines, 3 major developments or classes of developments that we should be looking at when it comes to the US and Iran. The first is a continuation of the status quo, resulting in a diplomatic breakthrough. This would look like a continuation of what we're seeing right now. Exchanges of fire between the US and Iran, relatively bellicose rhetoric from both sides claiming that re-escalation is imminent as both seek to maximize leverage. The situation remains tense, but ultimately results in an agreement being reached. The most likely form of that agreement is what we've seen reported in international media as being the so-called Memorandum of Understanding. It's a 14-point document that essentially would extend the current ceasefire by 60 days, set a timeline for further nuclear negotiations, and in some form or another reopen the Strait of Hormuz. That, of course, is the pinch point here, because that is where the global economy is currently being pinched most. It is the most central aspect of this conflict to global business activity. Unfortunately, it would appear that Iran is not minded to give up the leverage that it has secured with its soft blockade of the Strait of Hormuz. Rather, it is demanding a recognition of what it calls its natural right to regulate the movement of vessels through this waterway, a natural right that only emerged about 100 days ago, but one that is certainly being felt worldwide. In terms of what that looks like for the Strait of Hormuz, it's possible we will see Iran pulling back slightly in the spirit of seeking an agreement with the United States and moderating risks of conflict escalation. That would likely mean that we would not see the $2 million tolls that we've seen being reported in industry media being exacted on vessels that hope to move through Iranian-approved routes. But it would mean that Iran is likely going to continue requiring extensive disclosures of vessel ownership, of cargo, of staff who are on various vessels attempting to move through the waterway. And all of that brings us closer to a reality in the long term where Iran can choose to periodically tighten their grip on the waterway, to enforce increasingly soft closures during periods of elevated economic tensions, during periods of diplomatic tensions with states like Saudi Arabia, for example. This is something we've seen before. In 2020 and 2021, Iran made a habit of essentially hijacking vessels as a form of diplomacy in order to secure the release of frozen assets from countries like South Korea, for example. We would likely see that pattern of activity emerging again, and therefore the risk of periodic supply chain disruption, particularly for states that do not have close relations with Iran, like the UAE, which of course has borne the brunt of Iranian retaliation over the past few months, that would be particularly acute. The second scenario we should look at is one in which the United States essentially declares victory over Iran, washes its hands of the conflict, and pulls out of the Middle East. That, of course, would be beneficial in terms of risks of armed conflict. That would decrease because the US is saying that it is no longer part of that conflict. However, it leaves major question marks over the relations between Iran and Israel and whether or not Israel would have the latitude to re-engage. It also would not resolve the question of the Strait of Hormuz, and essentially a de facto reopening under Iranian terms is arguably a worst-case scenario for global industries. It also, of course, would send a broader message to America's strategic adversaries that when the going gets tough, if there are long-term costs or brutal economic pressure, that the US will back down, that it will not re-engage, that it will not seek an agreement. And when we're talking about locations like Taiwan, like the Straits of Malacca, that is an extremely negative message. And for those reasons, it's unlikely that the US is going to choose that course of action. That does bring us, though, to our most dangerous scenario, kinetically speaking, which is a re-engagement. If the United States and Israel become increasingly convinced that Iran is not minded to make adequate concessions during negotiations, either now in terms of the current Memorandum of Understanding or in the long term when it comes to those broader nuclear negotiations, appetite for re-engagement will increase. That type of re-engagement could be relatively brief. It could be one in which the United States and Israel target military leadership, aim to undermine the integrity of Iran's military-industrial complex. It could also be one in which the US and Iran engage in whole-scale re-escalation, aim to cripple the stability of the regime by targeting things like major bridges, energy infrastructure, water desalination infrastructure. We know how Iran responds to that, with a de facto and total closure of the Strait of Hormuz, routine targeting of similar infrastructure in the Gulf. I'm sure I don't need to tell anyone in this room about the impact of the strikes targeting Ras Laffan during the active phase of this conflict. We should expect to see that again if the conflict re-escalates. And so what we're looking at when it comes to these scenarios is, of course, a very diverse risk picture, one that potentially promises a temporary de-escalation in the first scenario, a longer-term de-escalation, but a more risky global environment in the second, and, of course, a cataclysmic re-escalation in the third, none of which can be ruled out at this point in time.
Megan Sutcliffe there a few weeks ago now, but just as you said before we led into that, more relevant than even back then, I think.
Yeah, arguably more relevant than ever now that we've seen with hindsight how things have played out. And I think Megan, not sure if it's on that clip there, but Megan's kind of point was the scenario most likely to happen was that Iran would essentially keep that grip on the Strait of Hormuz and decide if it was closed or open. And you'd have to say that's kind of happened. That has materialized one way or another. They have got a grip on it.
When that leads seamlessly into a next topic of ours, and that's helium shortages. You said that now was around the time we'd start to feel those pinch points due to the war. And I think we've just recently seen maybe the first public display of that anyway.
I think we are you referring to our story this week on a hospital in Mangaluru in India facing a helium shortage?
Yes, so this was just a few days ago that very hospital that you mentioned there are facing a helium shortage due to the supply chain disruption that is being caused by that war in the Middle East. Reports saying the MRI scans have reduced from around 13 per day to just 5 or 6 in emergency cases, with only around 5% of the helium supply remaining. We're unsure if this is a widespread issue at the moment, and we've reached out to those who can comment, and this is one that we'll be keeping an eye on.
Yeah, I mean, I'd be surprised if it was an isolated case. I think that there's probably many more that we're not hearing about for whatever reason. And if this does continue, we're probably, in all likelihood, there will be many more arising where we're going to start to hear more about those. So, yeah, it's a very sorry state of affairs. Obviously, when it starts to impinge on something like healthcare, and particularly in regions or countries or lower middle income countries, for example, as we saw with medical oxygen during COVID, particularly in those regions, it's not great, is it? We need to be kind of ring fencing those things. So it'll be interesting to see how that continues to play out. But yeah, as we said, we're likely to see more of that if this endures.
And one final topic that we're going to get into today, or tee up for ourselves in a couple of weeks' time, is the financials, because financial season is just around the corner. We've got the upcoming quarterly and half-year results from all three majors later this week, don't we?
We do this week and into next, I think, isn't it? We should start to see those coming through. Have you got the dates in front of you there, Tom?
Yes, so we'll be hearing from Air Liquide on July 28th, Air Products on the 30th, and Linde the day after on July 31st.
Yep, and then some of the others we usually see trickle through a little bit more under the radar thereafter, whether that's because they are not listed or what their ownership structure is like. Important to note that Air Products is always slightly offset in its fiscal quarter. It's always a quarter ahead. Yep. But yeah, interesting to keep an eye on these. Obviously, we've seen some pretty big numbers, positive and negative, in the last few quarters or the last year. I just love the financials because it's a good time to see what's happening or what's been happening, what the direction of travel is for the industry. I would spend less time on the headline earnings per share numbers or EPS, and more time on what management says about the next 12 to 24 months. That gives you a feeling for where we're going. Industrial gases is one of the most forward-looking sectors in chemicals. Its earnings are driven by contract portfolios, by capital allocation, and the timing of major projects. And it's also a great bellwether for what's happening out there in industry and economies. So you can read a lot from these financials.
One thing I'm particularly looking forward to or interested in hearing about is Air Products and their recent cancellation of the Louisiana clean energy project and abandoning its 1,700 ton per day blue hydrogen project, which is going to see a $2.9 billion write-down, which will be reflected in those Q3 results. It'll be interesting to see what they say about that.
Yeah, I think the big question is, will we see more answers or more figures on that, and the write-down impact? For me, I'd also like to see, it'll be interesting not just in the Air Products results, but in those of Linde and Air Liquide, maybe some of the others like Nippon Sanso and Mesa as well. Where are we at with this potential fork in the road between grey hydrogen and blue? Are we seeing the economic realities bite, as we saw with that Louisiana project and Yara walking away from the blue ammonia side of it? Are we looking at more of a path towards grey at the moment? Let's discuss. We've just covered that quite extensively in our August issue of Gasworld magazine, which is why it's on my mind, but it'll be good to see what the signal is coming out of those financials.
And on that, perhaps we should get a mid-year editor's review.
Would love to do that. A really good candid one. Let's just sit down with a cup of coffee in the studio and talk gas.
Yeah, we'll have to get that booked in for the next couple of weeks. But on the financials, another thing that I'm keen to keep an eye out for is the demand behind the semiconductor and the electronics business, driven by AI, expecting to see that continue. That's been a theme that we've seen across the last, several sets of financial results. So interesting to see what comes up there.
Yeah, I think that would be interesting. Is the verve still going to be for electronics? What will we hear about healthcare? I mean, healthcare is quite a boring kind of non-cyclical part of the demand for gases, but you need boring in a successful business, so that's good. It'd be interesting to see what we can read from that. I think critically, Tom, when we study these financials, we're looking at two different trends. You've got what may have changed from quarter to quarter, and then also what we can tell from that helicopter view of trends. So where is pricing heading? What do we know about margins and business models that are in play? Quarter to quarter, you're not really expecting a strategy shift. So that will, as we said, just be interesting to see if electronics has maintained momentum, where healthcare's at. What can we learn about helium supply pricing? Because we heard some say that was a headwind, and others last time out say it was actually quite good for margins. If we're looking more at the, away from quarter to quarter, more at the helicopter view, then I'd be looking for those order backlogs or those project backlogs, the demand trends across the end user sectors, those margins and the pricing that drives them. And I think, you've got 5 companies, we've mentioned 3 of them, but you've got 5 companies that are at different points in the cycle. Linde are arguably the benchmark for margins and pricing and capital discipline. Air Liquide perhaps give us the strongest read on Europe, as well as electronics and hydrogen. Air Products, well, we've seen that they're under pressure from project execution and strategy questions. Nippon Sanso, probably the best indicator for the Japanese market as well as Europe these days. And of course, electronics and packaged gases. And then Mesa, as we said, family owned, private. So there's much less disclosure or less granularity in the detail. But any commentary from Mesa is also valuable because it remains one of the few large independent players and kind of corroborates everything else. So across those five, you've got a good read on where things are at.
Yeah, a lot for us to dissect in a couple of weeks, and we'll return to that very topic and dedicate an episode to it in a couple of weeks' time when we do have that full set of results. And Rob, you just one last point on this. You mentioned pricing there. Over the last few days, I've seen some pricing questions being put on the Gasworld website as our question of the day. So what are you looking for there?
Yeah, pricing is very much a hot topic at the moment. Interesting really because it's the gas industry is not very opaque when it comes to pricing. And we're also aware that so many of these contracts are, 5 years, 10 years, 15 years, sometimes 20-year contracts. So you wonder how much of a mechanism the pricing is. But yeah, it's a hot topic. Our sentiment that we're capturing suggests people think it's going to rise quite significantly. And we have seen inflation level rises in pricing over the last 6 to 12 months. It's often used as a lever to offset inflation for the gas companies themselves. But can pricing remain positive as that inflation normalizes? And we'll be looking in those financials for hints at the pricing contributions, really the underlying volume growth, and the mix of these, as well as those kind of energy pass-throughs. Is growth volume led again? Because that would be a return to organic growth. Which regions are actually expanding? As we said before, is healthcare still steady? Is electronics still the driver? Those will tell us much more about the state of the economy and the gases industry itself. So I'll be looking into pricing and project backlog, I think.
A lot of questions to be answered there. Of course, there'll be reporting on those results on the Gasworld website over the coming weeks, and we'll return to it here on the podcast. We'll also have continued analysis of the Baker Hughes and chart deal when we get it, as well as coverage of the war in the Middle East.
Yeah, where is that going? Donald, tell us, what is the game plan here?
We really do need to know. Rob, thanks for your time today. Always great to sit down in the studio and chat gas.
Good to be back. I hope we can do it next week with all the editors in tow and have some good conversations.
Yes, absolutely. So to our listeners, thanks for joining us today, and join us next week. In the meantime, do please like, follow and share.
Whether you're pouring the perfect beer, striking a welding arc, or keeping food fresh, McDanta, delivering the best in mixed gas solutions for over 35 years.